Welcome to BANDIT7 Credit Spreads Option System Review. I'm going to give you a preview of what this system is so you can look further into it and see if you want to buy it in order to potentially make a very nice cash flow. And so we're trading on the micro level. Basically, we're trading 60-minute bars, looking to go inside the swing for more opportunities, and we're looking to exploit weekly options, particularly short-term weekly options, to the very same week, in fact. And so, we wanted a way to take advantage of basically selling options without having to put up a lot of margin. And so we figured out this way called BANDIT7. Now let's check this out here. BANDIT7. We're here at the presentation page. As you can see here, some of the concepts of $3,000 a week extra weekly paycheck. Okay, sounds pretty cool, right? So what's that based on? Okay, we'll look at the performance. 8-week systems results sampling. Okay, systems results sampling. So that means that this sample is based on the actual system. Means that they're based on this. It's based on the system rules. So this is what you would be buying. You would be buying the system rules, and so therefore, when you see your entry, you put one of these on. And since we're trading 60-minute bars, you want to put these on promptly. All right. Sometimes you get a trigger and the bar goes back, and you can get a better entry actually. But as soon as you trigger, you just put it on, and you look to simply expire it, and that's what this track record is based on. So why we've shown a 1-to-1 risk to reward ratio. Ultimately, what we've done here is we crossed this with the concept of binary options. Yep, binary options have a ton of those binary option systems. Okay, so I took some ideas back from binary options to vanillas, because originally the binary options systems had to borrow from my vanillas to make those binary systems to put out the first binary option system to the market, and a bunch since then. So here you can see the wins and losses. Kind of looks like a binary options track record, and you can see how it adds up. You have here we're looking at getting a 1-to-1 risk to reward ratio on credit spread, not that nonsense out of the money credit spread where you have a huge risk to tiny reward, which lures you into trading too big. And then when you trade too big and something bad happens, and all of a sudden you get assigned, and or you get assigned whereas expires in between the strikes or something like that, now you got a big problem because you sold way too many. All right, so anyways, but you see here, we look for a 1-to-1 because we want to get paid, right, for our risk. So, but also, you have that buffered scenario, whereas if it goes back on you, you have a buffer in the spread. All right, because one side's short, one side's long, buffer for less loss. But if you have huge bid-ask spreads, though, well, then that's going to kind of negate things. But so you want to trade active stocks like Apple has good bid-ask spreads. Apple's a good example. Oh, this is Apple, okay. And so we have 8 weeks here, and you can see how we just do the system. All right, so as we just do the trades, don't think too much about it. We just put the trades on, and this is how the system rolls. Okay, these are vanilla options, not binaries. Just to let you know, we took a binary options concept and crossed it over. Okay, so keep that perspective. And here some days we're just kind of mediocre, weeks, sorry. And that'll happen. Some weeks are pretty great, 6-1, 7-2, 8-2. Okay, so you're seeing we're putting on a number of these. So you're going to have to adjust your position size into where you're comfortable, and you're going to have to pay attention because you don't want to, you want to make sure you're going to get out. You just want to deal with your positions, make sure you're not going to go expiring between strikes and such. And okay, so but just you can talk to your broker about the details on that, and they'll walk you through the mechanics. They love explaining mechanics. So So you can see here 8 weeks time. So therefore, what does this mean? 1-to-1 risk reward ratio. So if you're taking $1,000 per trade, you're putting up $1,000 in margin to hopefully expire this and make $1,000 profit. Roughly, minus cost bid-ask spread. Then so now if you up your game to 50 contracts, so you have 1-to-1 risk reward ratio. Whereas I'm just thinking of like a 2-point strike, I guess you can say here, or you put up the amount of $5,000. Doesn't have to be 50 contracts, I guess, right? So you put up the amount of $5,000 in a 1-to-1 risk reward ratio. Your risk is $5,000. I mean, if everything goes bad and stock pops on you and your spread gets blown out. Okay, that's your risk. Okay, so if you lose one, well, I mean, then you win one and you're roughly break even. So this is what we're looking at, though. Okay, 1,000 risk per trade, 5,000 risk per trade, and in 8 weeks, are you seeing these total numbers here? This is 8 weeks. All right, that's good cash flow. All right, so now it's going to be relative to, because you see a lot of trades here. That's 9 trades in a week. You have to be able to handle that and balance that with assignment. So I'm just telling you right up front, just to keep the perspective on that. But discuss this kind of concept with the broker, and if you could, of course, you have to monitor it because you're, in a moderate way, you're trading 60-minute bars and you're not day trading. But so, when you have your setup, you just you go over and you can even put price alerts. I'm sure you can find a solution for that, and just put on your trades and look to do this. I mean, basically, you have to work it, but it's worth it. It can be worth it. I can't promise you future returns. You know how that goes. See the disclaimers below, but this is pretty nifty. And so if you're interested in this kind of potential here, then you can sign up below, hit the add to cart button, or click the link to find out more information. Contact us if you have any questions. All right, thanks.